Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louis, and I'm excited to share today's top stories with you. We're starting off with a look at the latest developments in the IPO market. Aditya Infotech, a leading player in video security and surveillance solutions, is set to launch its initial public offering on July 29. The company, which operates under the brand name CP+, is looking to raise funds through a fresh issue of shares worth Rs 500 crore and an offer for sale of Rs 800 crore. According to reports, the IPO has already generated significant interest among investors, with the gray market premium indicating a strong demand for the stock. Brokerage firm Guy Broking has assigned a subscribe for long-term rating to the issue, citing the company's consistent growth over the last 3 financial years and its average return on equity of 34.53%. But what does this mean for investors? Should you consider subscribing to the Aditya Infotech IPO? We'll be taking a closer look at the company's financial performance, its products and services, and the overall market conditions to help you make an informed decision. On the other hand, we also have Shriram Transport Finance Company, which has reported a 39% rise in net profit for the quarter ended June. The company's assets under management have grown significantly, and it has managed to maintain a healthy provisioning coverage ratio. But is this enough to make it an attractive investment opportunity? We'll be discussing these stories and more on today's show, so stay tuned for our expert analysis and insights. We'll also be keeping an eye on the market trends and bringing you updates on the latest developments. So if you're looking to navigate the complex world of stocks and finance, you're in the right place. We'll provide you with the information and expertise you need to make smart investment decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we dive into the middle segment of our show, it's clear that bond traders are bracing themselves for a frenetic week ahead. With the Federal Reserve meeting, quarterly debt sales, and the highly anticipated July jobs report all on the horizon, investors are eagerly awaiting the latest development. As Bloomberg's Michael McKenzie reports, the Treasuries market is on course for only its second negative month this year, with yields higher across all maturities amid a string of resilient data reports. It seems that bond investors have reduced rate cut expectations, and now all eyes are on the Fed to see how they'll respond. But what's really caught my attention is the shift in focus among bond dealers since Scott Bessent took the Treasury's helm in January. Initially, the question was how quickly he'd ramp up sales of longer-term securities, but now it seems that bills are where it's at. As Chris Anstey notes, Bessent and other Republicans had accused former Treasury Secretary Janet Yellen of artificially holding down sales of longer-term debt to keep borrowing costs low before the election. Meanwhile, stocks are kicking off the week with a bullish tone, thanks in part to the US-EU trade deal. Alexandra Semenova, Michael McKenzie, and Phil Serafino report that Wall Street pros are staring down a pivotal week that will likely set the tone for the rest of the year in markets and the economy. As we navigate these complex market dynamics, it's essential to remember that the more things change, the more they stay the same. While the players and policies may shift, the underlying principles of economics remain constant. So don't panic, take a deep breath, and let's break down what this means for your investments. After all, as I always say, a correction is when you lose money. A bear market is when I lose money. And trust me, no one wants to be on the losing end of that equation. Our technical analysts, are hard at work parsing the data and trends, but it's crucial to keep things in perspective. Where do you stay your money Monday? That's a question for the ages, my friends. As we continue to monitor these developments, remember that a well-diversified portfolio is key to weathering any market storm. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's episode, I want to shift our focus to a recent interview with Davina Mehra, a seasoned expert in the world of finance. Her insights offer a nuanced perspective on navigating the complexities of the current market landscape. Mehra emphasizes that good investing is often about embracing a long-term view, rather than reacting impulsively to short-term fluctuations. She notes that while domestic earnings have been mixed, there are signs of improvement on the horizon, particularly with the second quarter showing promise. The decrease in inflation, especially in essential items like food and crude oil, could lead to household budgets having more room for discretionary spending, which in turn could boost consumption. However, Mehra also highlights the importance of managing risk amidst global uncertainty. She advises against being fully invested in equities at any given time, emphasizing the need for a balanced portfolio. Her point about not missing out on sharp upward moves in the market when fear and uncertainty are prevalent is well taken. Historically, some of the best days in the market have occurred during periods of high volatility. It's also worth considering Mehra's observation about the evolving nature of successful stocks. The leaders of one bull market are rarely the same as those of the next. This underscores the need for ongoing portfolio assessment and adjustment, rather than adopting a buy and forget strategy. As we consider these insights, it's clear that navigating today's financial markets requires a thoughtful and informed approach. Whether you're a seasoned investor or just starting out, staying abreast of market trends, managing risk effectively, and maintaining a balanced perspective are key to making informed decisions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.